My name is Roger Felton, and we're going to be doing an educational presentation this morning. This is going to be purely educational. There's no sales pitch, no arm twisting. I just want you guys to learn a little bit about what we do at Felton Trading, and I've entitled this presentation "Consistent Success. It's Closer Than You Think." Many of you guys have probably heard the expression, that, man, there's a thin line between success and, I hate to use the word failure, non-success, success and struggling. So what I wanted to do is show you guys what we do, because it is simple, it is clear, and it's easy to teach. And it's also 100% mechanical, and that helps a lot. A lot of trading systems are good, but they do contain a lot of subjectivity. So let me move on here. Oh, by the way, guys, if you have any questions, you don't have to hold off till the end. I have my staff in here who will answer any of the simple questions that you have, and they'll be glad to do that. If it's something that I need to address, well, they'll let me know. They'll pass me a note, and then I'll show you that. So if I come to something and you say, whoa, man, I've never seen that before, and I guarantee most of you will see things you've never seen before, you feel free to have them let me know to clarify it for you. Okay, I like to start off by explaining, hey, I'm a trader. Every morning I take my little 2 contracts and in the trading room, and my daily goal is a 4-figure. And sometimes it's a 3-figure, and sometimes it's a little red number there. But the point is, my goal is to average a 4-figure. This was Monday, and this was yesterday right here. So you can see, so far this week, I'm on track. These are trades that I take in full view of my group, trial members and students, and totally interactive room. They can ask all the questions they want. Hey, what did you do that for? Why'd you like that trade? Why'd you put your stop there? How are you going to manage this one? Those kind of things. Where's your target? This was, I put this up here, sorry guys, I didn't toot my horn here. Monday was a flawless day, 8 trades, no loser. And I like days like that. I wish I had more of them. And this is all of last year. And I put this up here so you can see how consistent the system is. Now, it's not a black box. I have students, if you look at this, I know some of you will say, man, I do better than that. And others will say, man, I wish I could do that good. My job is to make sure that I do my darn level best to make you as good a trader as I am, or even better. That's my goal. Shoot high, and again, this is just using 2 contracts, but it's okay. And a lot of people enjoy watching the trades in the room. Before we get underway with the good stuff, I just want to, we all get into the right mindset. And, your trading system, it's your long-term financial partner. This is a marriage of sorts. Because you are married to this thing. It's going to be there with you through the ups and the downs, the thicks and the thin. It's going to be there for you to pull you through. It's your financial advisor, and it's going to help you a lot. But it won't help you if you've got the wrong system for the wrong personality, the wrong trading style, or the wrong account size. So choose yours wisely. The quickest way to stop winning is to stop learning. I hear it every single day almost. Traders come to me and they say, hey, man, you should have seen me in 2006. Man, should have seen how I was doing in 2004. And then I lost it all in 2005. Because they're just doing the same thing. They think what they're doing today is what they're going to be doing 5 years from now. And I don't know of any trader doing that. a professional trader, consistently successful. And reaching your peak potential takes training, it takes practice, it takes work, guys, work and effort. And staying there takes a lot more of both. All right, I want to introduce you to something that we've been working with for a long time. If you use NinjaTrader and several other platforms, you're going to see a bar type in there called the Renko. And when I saw that in NinjaTrader, which is the platform I use, I saw something in there. I wasn't too impressed with that bar type as it was constructed, but I saw some potential in there, and I got with my programmer, and we went back and forth, and boy, in no time, he said, "Okay, I know what you're looking for," and he came up with the Felton Trading enhanced Felton Trading Renko Supreme bars. Now, to best illustrate this, let's bring up a chart that many of you guys use. This is gold. It doesn't matter. It could be oil. It could be the ES. It could be the Russell. It could be anything. But this is gold on a 5-minute chart. It's up for a couple of bars. It's down for a couple of bars. It's up. It's down. It's down. It's up. It's the red, blue, blue, red, blue, doji. And I used time-based charts like this for years and years and years. And I'll never go back to them. Never. I feel silly trading a time-based chart now, because this is what my programmer, Mr. Ron Armour, who is in the room with you, and he could be glad to answer any questions you have. If you've got any programming questions, he's one of the best you can go to. But you see this. This is September the 3rd. I wish I should have updated it, but I found that it doesn't matter. Bring up a day, any day, and they all look like this. But look at this on gold on a 5-minute chart for September the 3rd, pretty much the whole day here, a little over. Now let's look at the Renko Supreme bars and see which bar type you would like or prefer to trade. Can you see the difference? Which one can tell you where in the heck this market's going? I used to get head fake all over the place with time-based chart, but with these, oh man, it made trading a dream. And really, what it does, it kind of channels price. These bars will sit there. Some of them will take 10 minutes. So if you're on larger charts, I'd take 20 minutes or more to make a bar. But it takes all that, the noise, not all, but it takes the majority of the noise out of the market and lets you see where is the market really going. So I don't have to have all those filters that I used to have using time-based chart, trying to figure out where is this market really going, what's it really up to. And you can see there's very often profit on practically every turn. Now this is a 22-1 Renko Supreme. Oh, and by the way, we've been using these for years and years and years and years and years. And now we're seeing more and more system providers, indicator providers, platform providers coming out with their version. So the word's kind of getting out about the value of these bars. This is a 22-1. That simply means that the bar itself, the blue, just the blue and the red colored part of these bars, is 22 ticks tall. Now I can make that anything. I can make it 50. I can make it 1,000. I could make it 2, whatever I want. The 1 is the step size, and that means simply the close of one bar to the close of the next bar. That's it. The close of one bar to the close of the next bar is 1 tick in this case. Now I can make that anything else I want. I could make this a 22-7, a 22-10. a lot of times I'll use a number that is half of the bar size. It doesn't produce a Heikin-Ashi or any. You'd see the difference if you put them up side by side, or a range chart. But not that those aren't useful chart, but like the Heikin-Ashi, it will lie to you. It'll tell you where the bar opened, and that's not where it opened. These will lie to you too, as far as where there's a bar open. Because you got to know the open, the high, the low, and the close. So this doesn't express it, but you'll see when we go to the live market that Rod also made a bar that's just an enhanced version of this called the Renko Supreme Open High Low Close, the OHLC, and you can see within each bar skeleton bar, a white little skeleton bar that shows you exactly what price did inside that bar. So now you can back test to your heart's content. You need that information to back test. I like having it in there just to see how calm or wild the market is. It helps me determine where I'm going to put my stop and when I need to maybe where I can tighten up my stop a little bit or loosen it up a little bit. But anyway, that's a Renko Supreme on gold on a 22-1 chart. Now let's take and learn a signal. Now this is what I call a half step. This appears as 16-1 of CL. That goes back a ways, doesn't it, on the December contract. We're going to be in the live market here in a minute. But this is a signal I call the stretch W. It's just a form of divergence, and probably many of you have traded or worked with divergence. It's one of the most powerful tools you can have in your trading arsenal, hands down. If you haven't worked with divergence, or maybe you worked with it and you just got confused on which one to take, work with it. Take another look at it. One of the things that I've found that is a characteristic of a divergent signal with excellent profit potential is the one that I call the stretch W, and that's all divergence does. It just makes a W formation. Let me emphasize it here. See the yellow line? That's the W. And if you're going to draw what we call a basic divergent signal, and our software Signal Pro puts it in there for you. It warns you well in advance that you've got a divergent signal, both visibly and audibly, that one's coming, and then it tells you when it fired. The signal confirms when the trigger bar, the one right over or right under, in this case, the blue bar here, the first blue bar. Now, this is really the fourth leg of the W. Here's your first. That one's got to be a big old stretched one. Well, it doesn't have to be humongous, just nice, just significant. And then it comes up for the second leg here. I'm hoping everybody can see my pointer. Then it comes down here for the third leg, and the fourth leg is your profit leg. This is where you're making money, or you hope you are, and usually do, on a stretch W, because it's got so much internal volatility that it's going to go someplace. Now, what I'm going to teach you this morning is a trade management technique that all right, I'm kidding, but you could almost trade a monkey to do this because it's so simple. Learning trade management where you capture the majority of a move, maybe through Fibonacci or Elliott wave or some other technique or methodology. You know, and I'm sure in this group there's traders who are familiar with you know, getting in and staying in, using some tool to help you stay in trades longer. But this is for the trader who wants to make profit but doesn't want to have to think and measure and calculate and draw all those lines and support and resistance and Fibonacci and all that. This is this is simple, guys. What I have found on these charts, now it's these charts. If you go to a time-based chart or a tick chart or something, forget about it. It's not going to work. But when you get one of these stretched leg W's out here, and you're in, the market will go to the 50% retrace. It's not a Fibonacci number. It's just 50%. It'll go there about 90%, 85 to 90% of the time. 90 certainly with just a little bit of filtering. But it's a high probability target. And many times it'll continue on up. But on this chart, guys, a 16.8, the step size, the difference between one bar close and the next bar's close is 8 ticks. So you can see that here, if I entered at the trigger, and I usually give it another tick or so here to get in, but from the trigger, the close of that bar, when the signal fires, there's 8, 16, 24, 32, 40. There's 60 ticks in here or more, and there's nothing wrong with a 50, 40, 50, 60 tick profit coming out of the CL. It's $20 a tick on 2 contracts. When I refer to it as I always talk about 2 contracts, because the real traders will ask me, why you trade 2 contracts? Man, you win such a high percentage of your trades. Why aren't you trading 10 and 15 and 20 and 50? Because in the trading room, I want students to see what they can do with just 2 contracts, because they can relate to that. Most of them can, but most of my students aren't. They don't come in and join Felton Trading already filthy rich. They come in a lot of times on a hope and a prayer that I can help them, and I do. I help my students every single day. I give them at least an hour of training, and on Fridays it's anywhere from 2 to 3, maybe 3.5 hours. Training. It really makes a difference. Also, by the way, I give them all the time they need, anytime they need. I'll work with them for afternoons, evenings, weekends, holidays. If they need me, they got me, and that to me has made a huge difference in not just the learning curve, but the success rate. Okay, back to business. This 50% target is what we're going to use today, and you'll see that, hey, if you let it go up, it goes. But you're going to see a lot of times when 50% is all it gives you, and I mean to the tick. It does it so often. I usually put my target 1 tick shy of that 50%. I have the code already does it. Here I used a modified Fibonacci tool. The only level I'm interested in is 50%. I don't care about 62 or 38 or any of that other stuff. If it works for you, you use it. you stick to it. You hang in there. Never ever change anything you're doing that's working for you. Okay, so that's the stretch W. The entry is on the trigger bar, the first blue, when it starts to make its 4th leg here, and it's at the close of the bar. The stop is going to be, you can't see it, kind of covered up. Let me take this off. The stop is placed about a tick past or beyond the tail of my trigger bar, my entry bar. That's a stop. And the reason I put it there is because that's the most ideal place to put it. If I put it any closer, there's no signal here, but if there was a signal to go short here, that would be my trigger bar. And if I put my stop in any tighter, than that, bang, I'm knocked out of the trade on a trade that goes on to make 8, 16, 24, 32. You know, you guys have had that? If you guys have ever had that happen, you get in a trade, the market knocks you off your saddle, you're sitting there in the weeds, waving goodbye as the market continues on in what would have been your profit direction. Sure you have. We all have. Well, this really minimizes that, because if the market comes up and takes out your stop, it's going to keep going the vast majority of the time, and you want out anyway. You're glad when you look back and say, "Why am I glad I got out there?" Look at it here. It didn't get hit. It didn't get hit entering here. Wouldn't have, there's only 8 ticks. But guys, you know, on 8 ticks on 2 contracts is what, $180? That's not bad. Not bad on 2 contracts. Okay, so let's look at the other version of this, and that is the stretched M. This is the inverse. This the previous one was the long signal to go long, the buy signal. This is the short. This is where you short the market on a stretched M basic divergence. The inverse, if you turn a W upside down, you have an M, right? The definition of divergence is, most traders use an oscillator of some kind. Could be a moving average, stochastic. I use a modified stochastic. In NinjaTrader, the parameters of my stochastic that I use to confirm divergent signal, the parameters are 6, 5, and 3. 6 is the percent D, 5 is the percent K, which I eliminate anyway, so it doesn't matter, and 3 is the smoothing. You can also use 2 on it for the smoothing, 2 to 3, whichever you prefer. But you'll see price make a double top. It'll come up to a high, down to a low, back up to a high, and the oscillator will come up and do just the opposite. It will come up and make a high up here to correspond to the first high. Then it comes down to its middle low. But it doesn't come up to exceed or go higher than the previous high, like it should, because of the stochastic's job. That's what he's born, time-tuned, and trained to do, is do what the market does. And when it doesn't, when it comes up and makes a high that's shorter than the first high, you got a divergent signal. Price makes a double top, the oscillator makes a corresponding lower high. That's it. That's about as simple a pattern as you could possibly wish for, and yet it's so powerful. This is the basic divergent signal here. The code puts it in there, audibly tells you with warning you've got it coming, and then it warns you when it happened. And so your entry would be at the close of the first red bar, and your profit target is the 50%. Now again, if you guys know how to stay in trade, you can recognize, maybe you're an Elliott wave person and this is your third wave or something. Great, go get them. And by the way, the code does put Elliott wave in there. I don't use it, but if I do see a third wave, potential third wave, yeah, it gives me a little bit, you know, I smile a little wider, but it's just one of those little gravy indicators. It's just a little more sizzle on the steak. But anyway, you can see, okay, we're good for, this is a 16.8. There's good for 1, 2, 3, 4. Each one making 8 ticks. That's a stretched M. We'll draw it in there for you so you see the first leg, how stretched it is. Is like it was made out of putty and somebody, or taffy, and they pulled it. Stretched basic divergence. This is we're constantly improving. This was introduced just last Friday, and to our group, and they now have it. And it is one of our students. I wish I take credit for this, but one of our students, and of course the squeeze has been around forever and ever and ever, but his version of the squeeze and how he filters squeeze signals is just outstanding. And he came in and did the class, or participated to a large degree in Friday's training, showing our students how to use his squeeze. The squeeze basically is, you got a Bollinger Band, that's the orange line and the green line. Those are your Bollinger Band line. And then you got a Keltner line, which are the two yellow lines. And when the Bollinger goes inside the Keltner, you're in a squeeze, and the code puts a gray background. Normally I run with a black background. I don't like the white background because I get retina burn from the glare. But the gray indicates you're in a squeeze situation. So this basic divergence here would be an excellent trade to take. The hidden divergence here would be another good one to take. This one here, not bad, but you might want to get in on the next bar. I can look at this and see that the angle of attack is so great right in here. It's gonna pop on through, and I'd probably take that hidden divergence. This is called an island bar. It's anytime you get a red, blue, red. Not anytime, because I filter some of them out, or the code does. But you got two of them back to back, island bars, red, blue, red. I also call them slingshots because they physically resemble a slingshot or a tuning fork or a goal post, football goal post, whatever you want to call them. Here's another one right here. That was outside the squeeze. So if you're a squeeze player, so I'm only going to take the trades in the squeeze, that might be one that you might avoid. But it's a powerful filter that I was using on Friday, and then I used Monday and Tuesday. So anyway, here's with good success, as you saw on the results that I showed you earlier. But you know, this really makes the chart look cluttered, doesn't it? Oh, and by the way, it will put the squeeze signal in there for you. I'm sorry I didn't turn it on, but it'll put the SQ. You'll see an SQ little designation for that. Means you're go long. You're in a squeeze. It would probably put it here where this BD is. It would probably put it where that HD signal is. Also call it a squeeze. Anyway, but a little trader said, oh man, all these lines and everything, that looks confusing. Well, let's get them off of there. You don't need them. The code will do all the work for you. It'll find the signal, and it'll designate squeeze, SQ. I'm sorry I didn't turn it on. You can see here this was a breakout signal here that I was looking at, and he was telling me, hey, watch out, you got a breakout signal. So I put an order in. Believe it or not, it never did. This was late at night. This was at 1930, about 1940. That's 18, 19, 7 something last night. And I normally don't trade that late, but signals don't seem to suffer accuracy anytime you want to trade. As long as you've got enough liquidity, you know, you're able to get in. So that's why I'm just trading 2 contracts. But it doesn't seem to suffer any accuracy. It just suffers the time, where you normally might take 3 minutes or 5 minutes on a 10, 15 tick trade. This one might take 30 minutes to complete his journey. But it never fired, so I canceled the order. One other thing, some of the many unique features that Rod has created in Signal Pro. Many of you guys, as you trade, maybe you're on a 3-minute, a 5-minute, 10-minute chart, but you might be trading, your primary chart might be a 1-minute or 3-minute. But before you pull the trigger, you look at a 7-minute, a 5-minute, a 10-minute, a 15, maybe a 30 or a 60. You just want to know, where am I? Am I going against the stream? Am I going against the grain, or am I going with the flow? Well, this goes out and tells you all that information for you. You can look at different bar types, different time frames. I stick with the Renkos because I don't have any use for any other bar type. But you can see as it shifts its color and goes. As long as I don't have a bright green dot when I get a signal like this UA signal here. There were no bright green dots at that time, so away I go. I'll enter right there. Or the trend line breakout signal. These are all signals that are generated on the one-step Renko bar, and you can see they're pretty good. I'll show you some on a one-step when we go to the live market in just a few seconds. But they're a big help. I can take this out at any size I want, and I can have it look at any other filters that I use, oscillators, support and resistance levels, just anything I want it to look at. It'll tell me what the story is. Is it with me or against me, or is it neutral, like the yellow dots here? I don't care. Neutral's, as long as he's not fighting me. I'll take the trade. Okay, let's go look and see what happened today in the live market. It's what have I got here? I got gold out here. We could bring up anything. It doesn't matter. But we'll look at gold here. I just want to point out some things as we work our way to the current market. And if I see a signal that looks promising, I'll pop the trigger on it. I already took one. That's my coffee money here. I better get this thing ready. We'll put it on a 10 tick. That just gets me in the market, and then I adjust my targets and my stops according to what the market tells me, where the market tells me to put them. Okay, so this is gold. Not particularly great, but you can see a stretched M right here, can't you? And the basic divergence. The stretched M. See, here's the first leg to a high, back down to a low, back up to a high, and that's the entry area right in here. Right in here. I let that bar close, and I'll put my limit order. I let the market come to me. I look at this and I say, okay, I know what the market is supposed to do. I know what my indicator says it's very likely to do. But lastly, I want the market to tell me, yeah, you figured right. You were right. You figured me out. And because, the market is a master at deception. There's nothing better than the market for confusion and frustration and it'll make you angry and upset. Making you think it's going to do one thing when it completely does the complete opposite. So I put that little order right there and said, come get me. Come get me. If you're going to work, come get me. The trade fires. I've got a legitimate signal. I didn't get in early only to have this go up and close as a blue bar, and then I'm in a trade that doesn't exist. I make it close out that red bar, and now I know I'm in a signal. I did my job right. And I could go for a 50% target. If I'm close to, Rod, by the way, created these support and resistance levels, and they're just nothing short of miraculous. They're so good, I use them for targets. So my 50% of the little leg here, from what we can see, would be, about here. On a 12.6, that would be 6, 12, 18, about 18 ticks, just shy of $400 on 2 contracts. But I stay in. If he gets that close to a support level down here, he'll go on down and test that thing. It's a compulsion they have to come like a kid touching a hot stove. He's got to come down there and touch it. And then he comes back up, and bam, that level works again. Worked back here. Market saw it here, bounces, comes on down. comes on down. There's no level down here, but if it hits it again, or I can tell it how many times it has to touch to produce a signal. And it comes up to a high up here. And notice how the market wants to get, when it makes a move like this. See that the profit. I'm not through with the profit yet. Right here, anytime it makes a significant move in the market, I'm looking at getting half of that back. And I can do that. Let's just bring up my modified Fibonacci. And here it is. And I just put it right at the top and run that down to the bottom. And now you see why I go for 50%. Not 62, not 80, not 100. You know, by the way, 100 is hit only about 40% of the time. The 100% level, 40%. Now some of you guys are good. I'm not, man. My hat's off to you if you're a Fibonacci or Elliott guy, and man, you know when the market's going to explode in a move and run up there. I got students in the room that are, shoot, they're better traders than I am. One of them uses Elliott wave. Along with some other things that we've included in Signal Pro. But hey, I'm happy with this. I'm happy with 6, 12, 18, 24, 30, and yeah, about, I don't know, 600 bucks. Yeah, count me in. I'll go for that. Notice the big drop here. We can take this down here. Now I'll forgive. We have a thing in the settings that says how many bars will you forgive on a run. So you can say this is a bearish run in the market, but you see this little blue bar in here. Yeah, that's just noise. 1 bar, 2 bars, that's noise. More than 2 bars, that's pullback. That's a pullback. So I'd take my modified fib here, and well, it's almost the same distance, isn't it? And I put it here, and the question is, did it make 50%? Did it grab 50% coming back? Sure did, sure did. That time it might have made the 62, but don't bet on it. At least not on every signal. Then the market gets, let me take this off. Then the market gets choppy, sloppy, just nasty. And I'll put channels in here. A lot of traders say, man, I'm trying to go long, I'm trying to go short, I just can't make anything, I can't trust the market. I can't trust the buyers, can't trust the seller. That's when I take a trend channel. And the code will make these, also it'll make them for you. For those of you who don't have a knack for channel, but you just want to try to find a best fit scenario. You're just catching the spirit of the trend. Doesn't have to be perfect. Doesn't have to be perfect. So okay. So now when do I trust the sellers? You're going to trust them when they break the channel. I'm talking about a bar completely outside. He poked out of there, but he didn't break out. Let's wait till he breaks out. There's a bar right there that says, okay, now the sellers have some stuff. Now they can kind of take control here, and they come up with a blue thing. Don't go long here. I don't know if you had a signal. Don't go long here. Because this bar tells you the sellers are taking over, and you can take your first short. There might have been one here. I have some of the signals turned off that it can generate, assuming it had a signal here. On this one, in a sense, I have. Sometimes I'll take these and I'll put the Fibonacci on here, because I've noticed that even though we've had some relative substantial pullback, of the blues and the red. Extensions. There's a lot more than 2 bars in a lot of these. The market still wants to get half of it back. So this becomes a pretty good little target. Before I would go short here, if there was a signal, I would notice that I've got a problem. I've got a, maybe not a deal breaker, but I've got a problem. He has seen this support level. He's seen it, and he felt it, and he reacted to it. He bounced. But he didn't bounce far. He just kind of comes up and kisses the bottom of that channel goodbye. And now he comes down and says, I want to get down here to 50%. That's what I got to do. And remember, I put mine about a tick shy of that. Very often, if he does come shy, he'll turn around somewhere and come down and finish the job. But isn't that amazing that you know not to go long in here? That bar tells you leave the buyers alone, leave them alone till they can break their channel, and you might want to draw another one there. And well, let's just do it because there's a good example of a signal here. We're going to take our trend tool. Let's just connect the dots. We really only need the top. We don't need the bottom, but it would be like that. So we're going to take and watch for the breakout bar. That's this blue one. That blue one says, okay, now next time you get a signal, hop in, a buy signal, not a sell signal. The sellers are toast. They're cooked. Take a buy signal. This is the slingshot. Remember I showed you those? The red, blue, red. I'm sorry I don't have them turned on, but I can go into Signal Pro. Let me just give you a little peek inside of the power of this machine. And these are the indicators, the things I've got turned on. Signal Pro generates signals. It does the sophisticated back testing. It does a bunch of things for you. The crystal ball tells you, are you trading the best chart, the best bar type, and the best time frame that you should be on? You know, some traders might be trading a 1 minute or 2 minute chart, and at the end of the day they look and say, God, Stern, if I'd have been trading a 3 minute chart, look at every signal work. And I didn't know. Darn, I wish I'd have known. Well, this will tell you. This will tell you, hey, you're on the wrong chart. This one's okay, but this one over here is a lot better. And it'll keep telling you that all day long. Sometimes it might recommend one bar type and time frame, and then later on it notices that, hey, there's a better one. And it'll tell you the instant that another time frame and bar type becomes better. I use a little trend MA, keep track of the trend, keep track of divergence, support and resistance. That's one of the things that I can put in here to tell me, well, that's these lines right here. And then I have a way I can take these and put them into what I call the global chart bars, and that puts them into that little item that, remember, you saw all those little red, horizontal red and green and yellow dots. That's the speedway. That puts that in there. But I want to turn on the IB signals. So I'm going to go to Signal Pro. That's where you do it. And you come up here. See all this stuff? See all these inputs and all this cool stuff? Yeah, there's a little learning curve to it. but everything is simple. It's simple. Does a lot of things. But you're probably not going to come to anything and say, man, I wish Signal Pro did this, or I wish it did that, but it doesn't do it. It's probably in there. Here's the breakout signal. I have it set for false, so let's turn it on. And we'll turn these things to no filter. We'll just show them all. Now down here, just a little ways further down, is what we call the global filter section. This is where I tell it, show me the 50% or any other number. I might want to look at a 62 or a 38 or something. You can put a couple of these in here and it'll show you a different level. But how many bars do I need in a run? How many bars, you know, if this thing runs up 6 bars and then you get a red bar to get in, you're about in where you should be getting out. You might have room for 1 bar, and maybe that's worth your while. But you might want to say, no, just give me 8 bars. If you can give me 8 bars, then I want to see the 50% level because I'm going to go for it. Now, how many bars against? If it's not a straight line of red or blue, how many? If it has an opposing bar in there, stuck in there here or there, like this little drop over here, that's a bearish drop, but it had 2 blues in there. But you say, that's okay. So we'll let 2 in here. Now you can choose any number you want, or just say no, I need all red or I need all blue. Minimum ticks there, that's 0. We'll set these little things. We don't have time to go into what all these are for. But this one right here is your marker. You want that one turned on. And this tells you what level, 50, 60, some fib number. What do you want? This one I usually make 0. Okay, so we're all set. Now we should see our 50% markers. And we do. And you can see a lot more signals too, don't you? But that little, here's, as you can see, the IBs are now put in there. We call them island bars, but also they're the slingshots too. And you're not going to take every trade. This is just garbage market. That's just trash market in here. But there's a nice stretched M right here. That would get my attention. That would definitely get my attention. I'm going to take these things off of here. Okay, my chart getting all cluttered up. And we'll take this off here too. But you can see he at 50%. Man, that's what he wants, and it's a quest. It's an obsession to get there. Okay, so you can see, there's some little money in there, but this one here. No, wait a minute. Where did I get? Do I have my 50%ers? I don't think it put it in there. It missed them. Missed them somehow or other. I didn't turn something on there to have it give me my 50% marker. But when it puts them in there, it just puts these little dash lines. Let me see if I have another chart that has those turned on. No, I didn't have enough charts. We'll probably see one. I don't need this moving average. Some of you guys use it just to keep track. When am I going with the trend? We'll take that off for now because it's not part of what we're doing. But notice this is just a classic stretched M, and this is the way it would have looked when it was time to go. It would have sat there for some period of time as it goes up and down and up and down. Closes right here. Your limit order down 1 tick further, and bam, you're in on the next bar. You're filled. Your stop goes here, and you're going for your 50%, which would be right about there. Again, this one went further. I mean, look at the big old distance this thing went huge, but. You got your this is a technique for traders who just don't get trade management. It just isn't coming together for you yet. We teach it. We teach trade management, but this is kind of trade management for for what is that? Those old books that you get, trade management for dummies. I'm just kidding, but. Anybody can learn 50%. There's nothing to learn. You learn that in 10 seconds. Find the 50%, and whenever it ran up, that's your target. And you say, well, yeah, but look at all that. And yeah, well, if you want to spend another year or 2 or 3 or 5 learning when to recognize when an explosive move is going to happen, okay, that's great. Traders do that. Some of them are very good at it. But some traders say, no, hey, I'm happy with 6, 12, 18, 24. I'm happy. I'm happy with that because there's so many signals throughout the day. So darn many of these things. Okay, here's one here that is kind of a good example. We're going to take our fib tool once again because it didn't put my 50%ers in there. But there it is. Now this is the obsession. This is the target. But you got a big old run right here, and you've got a problem. You've got this resistance right here. And what this is telling me is that, okay, price is going to come up to here for 12 ticks, 240 bucks, but it wants to get up to here. But it could hit this, bounce, come back up, bounce, hit this, you know, and at some point go on through and get this. At some point, it can get the 50% level. It usually does. But I'll show you how you handle it, even if it doesn't go there. I would make the near edge of my resistance here my target. That's my target right there. And then he comes down here on what we call a breakout signal. What this means is the buyers were supposed to get up to here. If they couldn't get to 50%, then there's something wrong with them. Now we know why they couldn't make it, because we had resistance there. And these bands are incredibly accurate. So we know where we're going to run into trouble. So I'm out right here. And then when we get the breakout, you know, now I would have made a little money here. Some traders going for the 50%, let's just say you said, nah, I think it's going to go on through. And he doesn't, and he goes red here, and you end up losing. What'd you lose? 6 ticks, roughly. We're just rounding it off. Might lose 7. Right here, you're getting your money back because there was a failure on the buyer's side. The buyers failed. They didn't do what they're supposed to do. They're screaming at you saying, man, I need a nap. You know, I gotta go eat. I gotta rest. So when they tell you that, the sellers are going to run over for 2 bars, Sometimes 1, but 2 bars. There's 1, and then almost 2. That one almost got 2, but he turned. Most of the time, you'll see when you get these little breakouts. We're going to call them breakouts, like this one right here. There's 2 bars. There's going to be 2 bars. Here, the breakout, and 2 bars. Here, the breakout, and 2 bars. If you go for 3, 4, 5, 10 bars, you're not going to get it. But there's a breakout. There were 3 bars. There's a breakout. There's a breakout. There's a breakout. Most of the time, there's 2. This tells me, and you might not want to take this one because this is a huge move, and the market wants to get, just has an obsession to get this back. And let's just run out here and see if he did get there. Look at that, to the tick, to the tick. He goes up to our 50. Amazing. But you know, it doesn't surprise you because you know that, okay, it's an obsession. This, by the way, is called a second consecutive against a trend. Try to memorize this pattern. It's a basic divergence. Okay, a basic divergence is a double bottom in price with a corresponding higher low on an oscillator. You don't have. Well, let me bring my oscillator up here. My escalator. I use modified stochastic. I told you the parameters. They are 6, 5, and 3. Here is, I use either the cycle or the cycle plus. They're very similar. And click new, and then click okie dokie. While I do that, I'm going to see if I can. What in the world did I do wrong on that? On that 50%. Let me look at that one more time on Signal Pro. I don't know why that thing wouldn't. Rod would probably know, but let me try again. I said 8, 2. True, 50-50. Okay, now I'm going to click apply, and let's see if it stayed there. Yeah, I believe it did. Okay, close it. Oh, there they are. There's my 50s. There's my target. That's my target right there. If I said, oh shoot, I'm gonna go for 50%. But memorize this pattern right here. Double bottom in price with a corresponding higher low on your oscillator. I colored mine to tell me when it's weakening. When red is really strong, man, ride that thing down. Pink says beware. Yellow means I can turn at any moment. And it usually does. But it comes down there to a double bottom in price with a corresponding higher low here. Then we get a double bottom in price and another higher low. It's not much, but it's a little. So I have two signals, two buy signals. Well, if I have two buy signals, each one requiring two lows, I should have 4 lows here, right? 2 for the first signal and 2 for the second. But there's only 3. And that means these two signals are shoved so close together that they share a common leg, a common component. That's this middle one right here. And the first signal's job is to slow the market down. Whatever he does, the second one says, I'm going to beat you. I'll beat whatever the first one does. And sometimes they'll take this as a pattern that is so strong. Sometimes they can turn the market into a trend that can go for the rest of the day or more, certainly for hours. But the sellers were really in control here. But the buyers were so strong on this one, they came up and got their goal. They hit their target. Then down they go, down they go. And right in here, he says, I'll get you 50% of this. He wiggled and jiggled in here, but remember your stop. Your stop goes here, and it pulls a couple bars back, but then comes back. Nobody gets you with your stop here, up here. So, and just look at when it makes a nice move up, it'll get 50% back. Comes down, and he'll get 50% of that back, over and over and over. If he doesn't, like here, we expect to say, oh man, let's go on up and get 50% of that. That was cool. Let's go get 50%. I'm pushing off that. Even pushing off a support couldn't do it. And so he says, let's go get 2 bars. There's 1. There's 2. You're out. He only had 3. That's why I go for 2. Here's a slingshot. That's going to be good for 2 bars. And maybe more. He's probably going to make it up to here. But there's your 50% target of what it dropped right here. There's 50%. So I'm already in at my 50. So I'd take that for 2. If I have a target up here of 50%, if the market had made a big drop and I had a 50% target up here or something, then I'd stay in for more. But 2 bars, 1, 2, that's 3. But that's your resistance, and he's very likely to get up to here and then turn. And that's exactly what he did. That's exactly what he did. There's a slingshot. And he says, I've got a target down here, so let's go get it. Let's go get it. Okay, so you say, well, that's just 2 bars. Guys, that's 12 ticks. That's $240 on 2 contracts. And you see this happen over and over and over and over. How many $200 trades do you need to make your goal? And you can see the accuracy here is incredible. This drops, gets 50%. This drops, he says, I'm going to go get 50% for you, and he couldn't do it. My target's up here, so how do I get my money back? I take the breakout, because two bars will be there. So I lose here, I get it back here. And it'll be there the majority of the time. If he makes his 50%, then I usually don't go for the two, especially if it's in a band. Okay, guys, let's go back to the PowerPoint and wrap her up. Gosh, this was fun. I'd love to stay out here in the live. That is the live market here, by the way. He's made a drop in here. He's made a blue bar, and now he wants to come back up to a little 50% here. Wouldn't be much profit there, a couple $100. But anyway, let's go back to our PowerPoint. If you want to see more, learn more, do more, we got something for you, and I'm going to talk about that. Now, Signal Pro is a very powerful tool. It does so much. I didn't even get a chance to show you the crystal ball. It calculates which bar type and time frame to be using. It plots Elliott waves in real time. It just does a whole bunch of things. We also have a sophisticated backtesting section in Signal Pro, monitors other time frames, even other bar types at a glance. The global strategy. Since the signals are so mechanical, you can teach it how you trade and then tell it, here, you do it. Here, Signal Pro, you go trade for me. You go do it, and it'll take over. It finds support, resistance levels that are so accurate you can use them for targets. You saw that. And performs dozens of vital functions to provide the data that every trader needs. And it's out there for you every single day. It's data that you can trust. There's an old Chinese proverb that says, what I hear, I forget. That's true, isn't it? What you hear, you forget. I go to these seminars and lectures and things, and by the time I get home, I forgot what it was all about. Maybe it's just maybe I'm getting old. But what I hear, I forget. What I see, I understand. Well, that's true too. And what I do, I learn. I can sit there and watch people ride a bike, and I understand. Hey, you get on that thing and you pedal. You turn the little pedals around with your feet. Yeah, I understand, but you don't know how to ride a bike. You don't know. You don't learn to do it until you get on it, right? All right. Well, Signal Pro is a powerful program, and we'd love to teach you how to use it. And you'll understand Signal Pro by watching, and you're going to be receiving unlimited mentorship, and then you're going to learn by actually trading on Signal Pro yourself with the daily expert guidance of the Felton Trading team. And you'll be trading with one of the most powerful precision-coded softwares available, and you're going to get the intensive training you need to be successful. Training. I said that in the very beginning. Training is the key. It's why so many trading systems are out there, and there's a lot of systems that are, yeah, they're okay. They're pretty good. Some are great, but they don't give you the training you need to. It's like handing somebody the keys to the space shuttle. You know, well, whoop-de-doo, this is just, it's garbage to most people. Unless you know how to get that thing off the ground, you'd be lucky to get it across the street, much less around the moon. Well, you can see this is just some of the things that the Signal Pro has in it. We're offering a 60-day deluxe trial, unlimited training. And when we say unlimited training, we mean unlimited training. And personal, we train every day, and those training sessions aren't over until you say they're over, until every question is answered, and everybody's a thumbs up, I got it, I'm good, and away you go. And the personal mentorship, what does that mean? That means me, Roger Felton, working with you one-on-one, afternoons, evenings, weekends, holidays. You know, you say, Roger, man, I'm slammed this week. I work. I just don't have the time. I get home from from work, and I'm tired. I want to be clear-headed. Can we get together Saturday from 10 to 1? Yeah, you betcha. You don't have to ask. You don't have to get out your wallet. You just say, hey, I need you, Roger. I need you. You got me. And you get that for 2 full months. It's over $1,000 actual value. And here's how it breaks down. Signal Pro is leased. If you lease it, you're leasing it for $300 a month. 2 months would be $600. 2 full months of complete access to the Felton Trading Room. Sorry about that. I forgot to put the O in there. But 2 months at $200 a month, $199. That's $400. That's $1,000 right there. You also have 2 full months of complete access to our daily training sessions. What are those worth? They're worth a lot. I don't even know what figure what to value these things at. They're invaluable. You can't progress and grow as a trader without them. And then 2 full months of unlimited, and I should have underlined that, personal mentorship with me, Roger Felton. I've been teaching traders for 17 years now, and I've gotten pretty darn good at it. What would you charge? What would you charge? If you become a student, it's you and I, guys, you and me, kid, for forever, forever. What's that worth? You know, at $150 an hour or something? I don't know. I don't know what we don't charge. I don't charge. Because I don't want anybody to think, oh, man, I really need Roger, but man, I don't want to have to get out my credit card. Leave it in your billfold and let us know you need me. Need me, you got me. We've never ever offered a trial membership this intensive, this long, or at this price. It's a special MarketFest offer, and it's unique to MarketFest. It ends February 18th. That's going to be Ash Wednesday, next Wednesday, so for 1 full week. So if you want it, you let Beverly know, Beverly at feltontrading.com. There's her phone number and there's her email address. Write it down if you'd like to give it a try. I guarantee at the end of at the end of 30 days, you're going to be a much better trader than you are today. You're going to be a better trader. Some of you guys are already great traders, and making you even better. The learning curve may not be quite as great, but you're going to learn things that I guarantee are going to help you, even if you're already doing really, really well. If you're struggling, you will be a better trader at the end of even 30 days on this thing. Remember, you get the free live training Monday through Friday, free personal mentorship anytime, and access to the Felton Trading Room Monday through Friday. If we're open, you have carte blanche, full access. So it's a course for traders who want personal and unlimited live training, the thing that's missing from most trading courses. You get it in a live market trading room, plus dedicated daily guidance from a proven trading professional. I know the guy who's willing to mentor you anytime. It's something. It's not something that's not work to me. I guess somebody said, Roger, you've got a teacher's heart, and I guess I do. My dad was a teacher, and if I didn't love it, I wouldn't do it. I wouldn't have to, but I do it because it makes such a huge difference in student success, not just in the speed of the learning curve, but the frequency of student success. The only traders that fail are the ones that give up. So you get that mentorship afternoons, evenings, weekends, and guys, if there's somebody else out there in this industry that will do that for you at no charge forever, or even for 2 months, in this case, boy, I'd love to meet the guy. I'd love to shake his hand because we think alike. Well, you get all this for $298. $298. That's not a bargain. I don't think there is one on the planet Earth. Again, there's Beverly's email address, Beverly at feltontrading.com. Give her a call. You'll be delighted to speak to her. I know her well. She's my wife, by the way. Okay, guys, our sincere thanks to each of you for your attendance. and for letting us help you be a better trader. And anyone needing additional personal instruction, whether you pick up on the 60-day trial or not, you just want a trader to talk to. You need just that, man, before I even spend a dime, I'd like to talk to Roger and learn more about this. Maybe he and I can go out in the live trading room and he can teach me more, where he's not limited on time. Sure, no obligation, no cost whatsoever, just you and I guarantee you'll have a good time and you're going to learn things. Well, special thanks also to everyone at Winvesting and all the gang, of course, at MarketFest. You guys sit tight. We got some great stuff coming up. We got presenters coming up here, and these guys are handpicked for their knowledge and for what they offer you. Okay? Well, we'll see you guys in the Felton Trading Room. I hope to see you very soon. You can go to our website and register. It's very simple. Maybe if they can, and we Beverly or Rod or someone can, one of our crew can put that link out there. But just go to feltontrading.com. You'll see it. Big old button. You can't miss it. Okay, I'm assuming that there weren't any questions for me, so that I needed to address. But if you think of any, if you say, oh man, I wish I'd asked Roger this or that, let me know, or call Beverly, or get her, just Beverly at feltontrading.com. She'll schedule a get together, and away we go. Well, again, it's been a pleasure, and hope to see you guys again. Stay tuned. There's a lot more ahead. Bye bye.